Hey there, I hope you're doing well. So everyone's talking about Jio Financial Services and the recent joint venture with BlackRock with such optimism as if BlackRock's Aladdin platform will magically give retail investors returns that they've never seen before. In today's video, I'm going to break down the business of Jio Financial Services Limited with the objective to decipher whether JFSL is really worth 2 lakh crores and is the exorbitantly high P ratio of 126 really justified. Keep in mind, this video does not intend to give any buy or sell recommendations, but simply aims to throw light on both the red flags and the green signals so you can decide for yourself whether investing in this stock aligns with your risk profile. In case you are new here, then hi, I'm Harshdeep Srivastav, a corporate finance graduate, an ex-investment banker, and now an entrepreneur. If you're really serious about building long-term sustainable wealth, then do consider subscribing to my channel. So without any further ado, let's get started. See, first of all, it's really important to set expectations right. Building a financial services business requires obtaining a lot of licenses, setting up of digital infrastructure, and hiring of a robust management team that can handle the complex structure and functionality of a financial services firm. The last 2 years of Jio Financial Services have mostly gone into doing these things, and the efforts towards scaling the business have now started, the results of which will be visible in the coming 2 to 3 financial years. Now, Jio Financial in itself is a core investment company that has several businesses through its 5 major consumer-facing entities. First, there is Jio Credit Limited, which offers products such as home loans, loan against property, and loans against securities. Then there is Jio Insurance Broking Limited, which in partnership with 34 plus insurance companies offers insurance products across health, life, and general segments. Third, there is Jio Payments Bank Limited, which provides a full range of banking products, including savings, salary accounts, debit cards, UPI services, as well as domestic money remittances. Fourth, there is Jio Payment Solutions Limited, which offers payment gateway, QR-based UPI solutions, and payment soundboxes. And lastly, there is Jio BlackRock joint venture, which is a 50-50 partnership that spans across asset management, wealth management, and broking business. Now, the question that comes in a lot of investors' mind is that how can a company with such small revenue base be worth 2 lakh crores? Well, to answer that, a large chunk of this value doesn't come from JFSL's operating business. It actually comes from its holding of 6.1% in Reliance Industries Limited, which it received at the time of demerger from its parent company. At the time of making this video, 6.1% of Reliance Industries is alone worth more than 1,15,000 crores. This means that JFSL's real value is much below 1 lakh crores at the moment. Also, the much hyped Jio BlackRock joint venture is just one segment of JFSL, and the Aladdin platform that BlackRock comes with is just a risk management system that helps fund managers use analytical tools and real-time data to make informed decisions. Aladdin in itself doesn't guarantee high returns for mutual funds. Ultimately, it's the market conditions and the management skills that affect the performance of a fund and not simply the use of Aladdin platform. Well, to be frank, an asset management company earns money through the fees they charge on the AUM, that is the expense ratio, and so even if Jio BlackRock's AUM reaches 20,000 crores and let's assume the expense ratio to be 0.2%, then the fees income earned is only going to be a meager 40 crores. Now, I'm not saying they won't be able to grow the AUM. In fact, Nitin Kamath of Zerodha says that if any company can expand the current market, it is going to be Jio BlackRock with its distribution power. It's just that the business that will generate substantial profits for JFSL in the future is going to be the lending business operated under Jio Credit Limited and not the AMC business. In the latest investor meeting led by CEO Hitesh Sethia, they mentioned that Jio Credit Limited's AUM grew from 217 crores in Q1 of FY25 to 11,665 crores in Q1 of FY26. On this AUM, Jio Financial Services will be able to earn high percentage of interest income instead of the little expense ratio fee that they earn on their AMC's AUM. Management at JFSL already knows about this, and that is why they have placed a high focus on growing the AUM of the lending business. Now, the next question is, if more than half the market value of Jio Financial Services comes from Reliance Industries holding and Jio BlackRock JV is still quite far from making substantial profits, what is it that investors are seeing in JFSL that its shares are trading at a P of 126? Well, at the moment, I can certainly say that the stock is quite overvalued, but the thing is, stocks like JFSL may only be available at premium prices because they have huge potential for growth if things work out as planned. Let me share with you some of the green signals in JFSL which are probably the reason for the frenzy in this stock. See, firstly, the company has made a strategic move to cross-sell Jio Finance's products to its Jio Telecom customers by integrating their unified digital storefront, that is the Jio Finance app, with the My Jio app. This has given JFSL access to a wide customer funnel which will help them distribute their products more efficiently to the masses. It is also bringing a lot of first-time consumers in the investment market by offering investment solutions such as digital gold for as low as 10 rupees and mutual fund schemes where the minimum investment amounts and the expense ratios are quite low when compared to other AMCs. Moreover, to grow their lending business under Jio Credit Limited, the company has expanded its physical branches in 11 cities to enable better outreach and on-ground support. As per CareEdge ratings, the housing loan market is going to expand from 33.5 lakh crores in 2024 to 81 lakh crores over the next 5 years, and therefore Jio Credit is focusing on this growth driver. Also, as you know, the property prices in metro cities is significantly higher than in tier 2 and tier 3 cities. The physical presence of Jio Credit Limited in metro cities means higher ticket size loans that will help to grow the loans AUM faster. Likewise, for their banking business, Jio Payments Bank is building a phygital presence, that is the Jio Finance app for a digital experience, and a business correspondent network of more than 50,000 touchpoints to enable last mile access and assisted services for all. In quantitative terms, the CASA customers have grown from 0.9 million in Q1 of FY25 to 2.58 million in Q1 of FY26, with deposits increasing from 117 crores in Q1 of FY25 to 358 crores in Q1 of FY26. Additionally, the company is investing heavily in technologies such as agentic AI to provide hyper-personalized financial advice, automate complex back-end operations, and enhance fraud detection with high accuracy. For those of you who don't know, agentic AI is a game changer in financial services because it is capable of autonomous decision making, planning, and action that is required to achieve predefined goals with minimal human oversight. Also, in the insurance domain, Jio Insurance Broking Limited is selling its products through 3 distinct channels: embedded, direct-to-consumer, and institutional sales. While at the moment, Policybazaar is the dominant leader in the digital insurance marketplace with a market share of 93%, Jio has launched their own digital-first marketplace, JioInsure.in, for seamless DIY journeys and plans from top insurers. Lastly, the confidence of investors further grows when additional equity infusions are made by the promoter group into JFSL entities. For example, recently on 30th of July 2025, JFSL's board approved raising 15,825 crores, of which 10,000 crores is reported to come straight from the Ambani family as a direct investment. These equity infusions will aid JFSL in better capital allocation in the subsidiaries and help the company scale with profitable unit economics in the long term. All in all, Jio Financial Services is building a single point ecosystem that fulfills the core financial needs of people, which are borrow, transact, invest, and protect. Through the separate dedicated entities for each need, the top management can better track progress and come up with actionable insights to scale them simultaneously. I personally have been accumulating the units of JFSL since October of 2024, and I believe in the long term, this stock has a huge potential if planned strategies are executed well. But still, I would say that JFSL is in the early stage of building a solid foundation, and this stock may be really risky to invest in for those that can't bear extreme volatility. I would highly recommend you to consult with your financial advisor to gauge whether investing in this stock is in tune to your risk profile, and only then consider making any investment decision. Let me know in the comment section what are your thoughts on Jio Financial Services, and do you think this stock is just a bubble ready to burst or a potential multi-bagger? Thank you so much for watching. Like the video, hit that subscribe button, and stay tuned for my next video.